on.
Okay. See, Mr. Gervais. Mr. Gervais, I know I owe you a phone call. I just realized I didn't call you back. Yeah, but I will. What I got? T Green, Mr. Gaudreau, Rich, Justin, Mr. Wynn, Mr. Brem, Patty, Coley, David, I can't see. Okay. Oh, you know what it is, Josh? I feel like it's for some reason my screen is
could be like all funky because you're allowed to have a Zoom.
Yeah, no,
yeah, it'll get fixed.
I can't see as many people as I normally would be able to see, and it's not letting me move from side to side either. You know what I mean? Where I could see more people. Does that sound right or no?
Could be. We'll fix it after the call.
Okay. All right. Shit, Parker's on. I thought we were going to pull off this call without Parker, and he snuck in. All right, everybody. Let me see what time it is here. It's 2:02. I apologize if my voice sounds a little nasally. My 12-year-old gave me a little cold here. Haven't had one of these in a while. So I'm fighting a little head congestion. You are on the Big Joel Mortgage Community Call. I can see that there's 35 of you on. I apologize if your camera's on and I can't see you right now. Something is funky with my screen, with my Zoom. So I apologize if I'm not waving to you and you have your screen on. But welcome, everybody. This is the 11 a.m. Pacific and 2 p.m. Eastern. We did miss a couple of weeks ago because it was Labor Day and I didn't want to change the schedule around. So welcome back, everyone. It's been about 30 days. For those of you that are new, we do use the chat, but usually when I'm talking, I'm not looking, but we will use it. And sometimes Josh will put things in the chat for you. You want to grab those before they disappear if there is anything in the chat. And if you want to ask any questions or any good things like that. So welcome, everybody. You got me today with no guest. I've got a couple of subjects I want to talk about. You all have heard me talk about some of these, but I really want to pound some of these home, especially with what's going on in the market. Number one, I just want you all to know I'm bullish on the fall. I know it's officially the fall in 2 days on Wednesday on the fall market. I'm extremely bullish on 2023. Regarding rates, I know they ticked up again. But one of the big things that you all need to understand, if you don't understand this, is that rents are still astronomically high. So if you have not mastered pencil selling, where you can explain to someone that, honestly, it doesn't really matter what the rate is. It's about what their payment is. And they're going to be paying on an appreciating asset versus paying for a landlord. There's plenty of deals out there that can be done. And that brings me to my first subject. And that is the best loan officers in the country right now are spending time with their agent partners, making sure that their agent partners know they need to get these potential buyers to their lender partner at 100 miles an hour, faster than they ever have before. If you think about this, there are some people on this call today, Ed Brem, Patty Bittard, who have been around for a long time. Same with Teresa Green, even David Wynn's on here, been around for a long time. You all have seen, lots of us have actually seen the rates go up. We have legions of loan officers and real estate agents that have never really seen an upward trending market before. They're really not prepared to even talk about it with their clients. There's plenty of loan officers that aren't prepared as well, but there's lots of agents that aren't prepared. Those of you that know me and sort of know how I roll know that I'm usually in front of 40, 50, 60 real estate agents a week somewhere in the country. I also am blessed to have the pleasure of coaching some of the best ones in the country as well. And I can tell you, when I go around the room and ask how long people have been in the business, usually 85% of the room is 2010, and forward, meaning 12 years is the veteran in the room usually. And what that really means to us as lenders is these are a whole lot of real estate agents that, while they may be very smart and very industrious and very good at their job, the one thing they haven't really had to do is do a lot of counseling with borrowers buyers regarding numbers, what I call pencil selling. I mean, a lot of math. Well, wait, you paid this for the house. This is the appreciation. This is your net return. Wait, this is your payment. This is your monthly payment. This is what your rent would be. Let's look at this. You know, they're just not prepared to have that conversation. One of the things that I'm noticing, and I'm talking to brokers, real estate brokers, broker of record, not necessarily just the agent selling the real estate. And the brokers are telling me that they know their people are losing a lot of potential deals because the agents aren't prepared and they're not moving their clients to their lender partner fast enough. So as you're doing your B2Bs, which of course all the Joel Crush people on here do with regularity, you should be doing 4 to 5 a week right now. You should make sure that you're bringing that up. A lot of times agents, they are creatures of habit. They have things that they say and do when they talk to a new client, whether it's a 5-minute conversation or a 25-minute conversation. There are things that they do up front. And what you need to be telling them is, please, please, please get your people to me as fast as you can. Let me overcome their objections regarding rates. Let me do it regarding the fact that what they think houses are worth. One of the biggest challenges we're having in the market right now, those of you on this call right now that are doing a lot of business know this, is you have a house listed for $500. It ends up going for, call it $485. Maybe there's a concession. I'm going to talk about that in a minute. Or maybe even it goes for $500, but then it appraises for $520 and the seller's freaking out that they gave their house away. Okay, they didn't give their house away. They don't even understand how it works. Of course, we have comps for $520 right now. We know the market we just came out of. All the comps are high. Okay, so a lot of these agents are unprepared to counsel buyers and sellers on this. And we, as their lender partner, keyword partner, need to be all up in the middle there helping them. Okay, this is hard for them. And let's let them sell the houses and we'll do the numbers. Let us do the paperwork, okay? And the faster they can get people to you, the higher close ratio or pull through there is. Since we've been on this call, probably every single loan officer on this call, and I think there's some agents on here as well. You could go in the chat and tell me if I'm right. There's almost every single loan officer in this call probably missed an opportunity because one of their agent partners was talking to someone. They put up a big stink and a big, hands up regarding rates. Rates are too high. Prices are going to come down. I want to wait. The potential buyer went away. But if they would have been talking to you, maybe they wouldn't have gone away as quickly because you would have taken your pen out and your calculator out and really did your job. Okay. This is a market for real deal loan officers. I was talking to a loan officer today who's a big producer who said, man, I'm just watching the LOs drop like flies. When this market turns, woo, am I going to be busy? I'm going to need a lot more people because I'm going to be doing a lot more business. A lot of loan officers, a lot of little cherry pickers doing 5-6 loans a month are all gone, literally gone. And I do think 2023 is going to be a very, very good year for us and for real estate in a big way. So the first thing I wanted to talk about is talking to your partners about getting their people to you quicker. How can we get the people to you quicker? What do they need to say? What do they need to do? Do you need to work with them on that a little bit? Do you need to say, Mr. Buyer, listen, this is a very unique market right now. There's a lot of things going on, a lot of moving parts. Because of this, I like to refer everyone to my lender partner as quickly as possible. He or she is an expert with numbers and will go through everything with you so you'll feel better. By the way, they're not going to tell you whether the rates are going to go up or down. They're not going to tell you whether the value of your home is going to go up or down, but they can go through all the numbers so you understand what's going on because it is still an awesome time to buy a house, period. Okay. So one of the big trends right now, again, this is a little bit more work for the loan officers, but getting you involved earlier and pencil selling. By the way, if you're on this call and you're listening to me and you don't quite know exactly what I'm talking about by pencil selling, it's this. Okay. Those of you can laugh at me and call me old if you want. If you cannot pre-qualify somebody with a calculator, a pen, and a napkin, you're probably not good at pencil selling. Okay. If you need your laptop to pre-qual somebody or to really talk to someone about the benefits of owning a home or buying a home, then you're not probably great at pencil selling. Okay. You need to be able to look someone in the eye and do their numbers. It's mortgage financial planning. We coined that term actually in the 90s in a mastermind group I was in. That's what it is. And you really, really have to be good at that. If you're not, go find someone in your branch, in your office, a manager to teach you how to do it. Okay. They should be able to teach you very quickly how to do it. Anyone that's renting in any major market right now, it's 99% of the time it's going to be better for them to buy something. I mean, at 6.5%, 30-year fix would be better for them to buy. I guarantee you the rents are so high right now, it's insane. Okay. And they're paying a landlord. They are not paying, obviously, for an appreciating asset. Okay. Number two, discount point concessions. You all have heard me talking about this. Okay. This is huge right now. If you're not talking to your agent partners and explaining this to them, shame on you. You should be explaining this. Okay. We know that a lot of these contracts, unless it is a smoking hot 3-2, have some type of seller concession right now. We're back to a little bit of a more normalized market. Again, example, we've got a $500,000 house. Okay. The seller could easily be letting potential buyers know, hey, this seller is willing to pay 3 discount points for the buyer to buy their rate down. When I started doing loans, this is how every contract was. There were no concessions. There was no $5,000 towards closing, $10,000 towards closing, whatever. The contracts literally came in and said discount points. Okay. So if that borrower borrows 90%, it's a $450 loan amount, 3 points, do the math, 13.5. Okay. Is what the concession would be, which is, very close to $15,000 off or $15,000 towards closing anyway. 3 points will buy you a heck of a lot of rate right now and will make a lot of potential borrowers smile. Okay. It's very easy to do. This is not a big deal. You just have to explain it to your agent partners. They truly usually don't understand this. They've never seen a market like this where you would actually do that. Okay. Now, a good loan officer, even when you get that borrower in your office, if you're really good and you know what you're doing, you'll probably be calling back and having the contract amended to just get a 13.5 credit to spend it on something else. Okay. So you don't burn those points to make it harder to refi. But ready? Here's the reality. Those of you that do math all the time, we know Ed Brem, how long does it take to get a point back? About 4 years, 3.75 years, something like that. So if you pay to buy the rate down, okay, and then you refi it, well, what happened? Well, you just lost all that money, right? But wait, the house appraised for $520. It didn't appraise for $500. It appraised for $520. So you look at it even a little differently as the seller is paying to buy that rate down. It's not the borrower paying, it's the seller. It's like a builder paying a buy down on new construction. Okay. It's the same thing. If you're not talking to your agents about this, you should be. I know Ed and I had a big conversation about this a couple of days ago. I've had this conversation with some other loan officers, and they've been talking to their agent partners, and the agent partners are extremely receptive to this. Okay. It's just one more thing for them to talk about with sellers. And even with buyers if they're making offers. Okay. Number 3, speed to close. If you are not taking a complete app up front, I know that can mean a lot of things right now. There aren't even apps anymore. Okay. If you are not doing your job up front, then you cannot crank 14-day closings without making your ops people insane. Most companies have skeleton crews and ops right now. So the last thing they want to see is wailing closings coming through. But the best way to deal with interest rates all over the map, okay, with banks with predatory product, with anybody you're competing against with predatory product, is speed to close. If your agents are writing 14-day closings, you can get just about every single loan, okay, because most people aren't doing that. Now, that's 14 days from when you receive the contract. I'm assuming you have every single document in the file. Those of you that have been through crush groups with me, you know about my BICPP system. If you have loans sitting in your virtual drawer that you pre-qualified 2 months ago with all the docs expired, well, you're not doing a 14-day close when you get that contract. What you're doing is you're basically originating the loan again because you have to redoc the whole thing. So now you've originated the thing twice, even though you gave a pre-qual letter, and maybe depending on what company you work at, you might have even, had the loan pre-approved by an underwriter. Okay, but that's all out the window because those docs are toast because you need new docs, and basically, God help you if they change jobs. Okay, or if there's large deposits in there and you didn't even look at it. Okay, so speed to close is all about how you're docking the files up front and what kind of job you're doing. If you ever catch yourself saying to yourself, oh, my LOA will get that, that is a very bad statement. Okay, I challenge everyone on this call right now to pull your last 10 loan approvals. And if there's anything on those approvals except for title, all right, and EMD and homeowners insurance, you have a baby problem. Okay, there should be no conditions on there. That is the only way to whale your loans through. If you have underwriters redoing your income, that is the biggest epic fail ever. Fail. If you have large deposit conditions, fail. LOX conditions, fail. You should have none of that. You are all experienced loan officers. All of that stuff should be dealt with and should be in the file when it goes to underwriting. Okay? That is the only way you're going to be able to do quick closings. And I will tell you, if you talk to some of your fellow loan officers that are doing this, that are having their agents write 14-day closes, and I can tell you some of the best loan officers in the country, people at the top of the Scotsman's Guide, are doing this all day. They're wiping the floor with your body on those, okay? I don't care if their rate's a quarter higher. They're getting the loan because they're going to close it in 14 days, and it's going to be done, okay? So discount point concessions, that can only be discussed really at B2Bs. So if you're not doing your B2Bs, shame on you. Agent handoff, another B2B discussion. You're not going to get off this call and start calling people and telling them what to do. The agents are going to be like, whatever. They don't care. You got to get in front of them and really make sure they understand what you're saying. Okay? You're doing this to help them and to help them a lot. I was in a group. He's not on this call right now. I was in Hartford, Connecticut last week. I was in front of a whole bunch of agents. There were some really, really good agents in that room, some of the best agents in the state of Connecticut on that room. And they all were so receptive to A, quicker handoff, and B, talking about writing discount points in on listings. So receptive. They were all like, oh, yes, 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 and yes. There was not one hand that went up to argue or debate the point at all. I said, hey, how would you like to be able to write 14-day closes? They're like, yes, please, because there's so much going on in the market. They want to get people under contract and get them closed. So you all should be able to do that. Now, I realize it's kind of interesting because most companies are still laying off and riffing people. So your crews have gotten smaller, right? So you're thinking, oh, God, Joel, you're telling us to write 14-day closes. We're barely getting 28, 30-day closes because half the people are gone. Well, you know what? Too bad. Do enough production that you have your own people. You could do that at any company represented on this call right now. Okay, because the big companies are very smart. They are taking care of their good producers that are doing the job correctly. All right. You want those great underwriters that are left over asking for you. Hey, I want David Wynn's files. Those are the files I want. Those are clean. There's going to be no conditions on them. I can whale them through. Those are the files I want. As they pick and choose their loan officer flow as people get riffed and laid off. The other thing, and I want to say this, I've been watching anyone that I'm that's been through a crush group, I'm pretty much connected with on social media. So I'm watching their social media. But please, please, please do not go negative on rates or this market in any way on social media. Our job is to be ambassadors of positivity. You can write that down. Ambassadors of positivity, period. I don't care if people are upset, they're crying, they're this, they're that, the rates are high, wow, I'll never sell another house again. Your job is to be positive. Do not get down in the cesspool and get negative with anyone that's getting negative about anything. The media already does a good enough job for us on that. We don't need any more piling on. You should be super positive. You should be pumping your partners up. Okay, there's still over 5 million potential homeowners in the market that want to buy a house. 5 million. Okay, that is a lot of people. And I know a big portion of those people are probably going to buy in Florida, of course. But there's a lot of people that still want to buy houses. Okay, and the bottom line is, I dare you to do a little study in your little baby market, wherever you are, and see what rents are on apartments, and then look and then run some PITI, run some monthly payment numbers on a first-time buyer with 3 or 5% down, and look at those payments, because I will bet you the payment on that house is less than the rent, or very close. And it doesn't matter. If it's the same, it's still better to own. Okay? And again, if you don't know how to explain that, please find a mentor. Find somebody in your office, somebody that works with you that can really teach you that, because you need to be teaching your partners. You need to be teaching these borrowers. We have a bunch of people. It is can you imagine this? It's 2022. I just put a note on someone's Instagram. They put a picture of their kid, and I said, oh, heavyweight wrestling champion 2042. And I was like, oh my God, 2042. That's 20 years from now. It's 2022. Oh my God. So think about this. Think about how long the rates have been stupidly low. Think about the last time they really went up like this. It's been forever. Most people have never seen this. There are potential borrowers out there that literally think they should have a 3% 30-year fixed rate. They literally are like, well, where's that? I mean, that's where I should be getting. It's complete insanity, okay? And the bottom line is they need to be educated, and they need to understand. Because if they're smart, they'll get it. I don't know about you all. I'm not seeing a housing crash anytime soon. I'm not seeing the values going to the bottom anytime soon. I'm just seeing level off, some concessions, and rates dip a little bit in the first quarter or at the end of the year. Watch what happens. The bus has left the station again. Those houses are going right back up. Okay, there's no sitting around waiting for the crash. We did another thing where, with this group of agents, one of them asked me, well, Joel, why is this different from 2008? I said, oh, what a great question. Because if anyone asks you that, it's an incredible question. A, people have to actually qualify for the loans right now. B, there's no exotic loan programs to even shimmy people into a house. And C, most people have a ton of equity in their house right now. And I don't know that many servicers that are going to be all about taking someone's house from a nurse and a fireman because something happened. Okay, I just don't see it happening right now at all. This market is nothing like 2008. The other thing is, in the media, there's going to be a spate of foreclosures. There's going to be tons of them. Well, you know what they're leaving off? Classic media. They're leaving off the fact that, well, yeah, but it's the same foreclosures that would have been every year during COVID that all had stays of execution. There's not a bunch of foreclosures because of the market right now or because of rates. It's because everybody got to stay in their house for 2.5 years or whatever. That's why they're finally clicking over. And instead of there being, if there's normally, say, 1 a week, there'll be 3, whatever it is, with whatever the servicer is. And it's a brand new one. It's someone that should have been foreclosed on 3 years ago, or 2 years ago, that had a massive stay of execution. So, you got to explain that to your agent partners. They don't totally understand that. They're not thinking that way. You really, 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 really need to explain it. Okay. So everyone, if you're not out there right now, agents are still getting over 30 phone calls a day from lenders that think it's a smart idea to sit in their comfy little chair with their drink and their sandwich and dial agents and ask for a coffee meeting. Okay. Or one better, they're paying outside companies to have dialers not in the United States calling these agents to set up coffee meetings. As someone that coaches some of the best agents in the country, I am telling you, nothing cracks these people up more than getting those calls. Okay? That is a total waste of time. All right. You need to be out in front of people, sitting with them, talking to them, being with them, not for 10 minutes, for an hour. Okay. You need to be out. You should never be in your office right now, period. All right. You should be out in front of people. As Tom Hopkins used to say years ago, STP, see the people. Okay. You should be out. All right. Your phone should barely be used. Okay. You should barely be texting. You should be seeing people. All right. If you are not doing 4 B2Bs a week right now, you're failing. It should be closer to 5. You really, really, really need to be on the street. The loan officers are dropping like flies, which is great for everyone on this call, because I'm betting if you're on this call, you're not going anywhere anytime soon. Again, I'll leave you with this. This is a market share market. MSM. This is a market share market. This is a market where people like you all take market share. Don't complain about, oh, there's less loans than this. Fine. Take the loans from another loan officer, or take the loans from someone that's getting out of the business. Okay. The loans are there for you to get. You should be taking them. All right. To quote the person I was talking to this morning, man, am I going to be busy next year when this thing just clicks. I said, oh, yeah. And he was literally listing people that have dropped out of the business and just thinking about what it was going to look like and what was going to go down. Okay. So everyone, heads up, ambassadors of positivity. Okay. And take market share. Thank you, everyone. And I'll see everyone in 2 weeks. See y'all later. Bye-bye.